FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to and perhaps even watching the Financial Survival Network. We apologize for any technical difficulties up front. We are on the road in our portable studio in New York, and I will be doing a triple Lutz report on my experiences in that once great city probably in the next day or two. Happy Thanksgiving to all of you out there, and thanks for taking time out to hear what we have to say. Our good friend Jamie Keech is with us now, and you're all familiar with Jamie. You've seen him on here numerous times. A good friend of the show, somebody who actually knows the mining business from the ground up rather than from the balance sheet up, which is what most people do. And Jamie, hey, wanted to talk to you about what's going on in the sector now. Not so much the price action of the underlying metals. We don't really care about that so much, but just how these companies are functioning, which ones to look towards, which ones to stay the hell away from, which you've been very outspoken about. And you've given us great insights into how to evaluate a junior miner. And that could be all the difference. And if you want to find out more about Jamie, just go over to resource-insider.com. And if you've got questions for Jamie or myself, we'd love to get your emails at kl@kerrylutz.com. So without further ado, Jamie, we're seeing gold back down to low 1,800, silver 23 plus per ounce. The companies that you're following, the companies that you're looking at currently, doing your due diligence on, that price movement, how much of a difference is it making for these companies?
Hey, Kerry. Well, thanks for having me on today. And, as usual, very much appreciate being here. And that's a good question to start off with. We're kind of at a very, very interesting point today. Gold hit $1,800 for the first time in quite a while. It's traded down from its highs. And the question is, how does that affect the companies that we're invested in or potentially going to invest in? And, the answer to that is it depends. Some companies that we're invested in, and I'm just kind of looking at my charts here on my phone as we have this conversation. Some of them are relatively unaffected. Now, as you know, and as probably many of our listeners know, we've been trading down, from the mid 1900s over the last several weeks. And of course, we've seen a pullback, I think something like on average of about 12%. Other companies have been hit pretty hard. So it really depends on the company. Fortunately, the way we've invested in these, we're still well in the money on probably 95% of our portfolio. But this is something we've been talking about at Resource Insider and on shows like yourself, that I've been invited on for some time, that this pullback has been expected. After such a jubilant run that we saw in the precious metal space throughout the summer, that is not a sustainable environment, and gold bull markets don't go up in a straight line. So we've expected this pullback for some time now. I think you and I have actually talked about that in the past, and now we're seeing it. And of course, it's painful to look at your charts and see a lot of red on there, but our positions are good positions. They're built based on fundamentals of the underlying assets and the management teams. And even at $1,800 gold, every single thing in our portfolio looks very, very attractive. I was talking to my analyst the other day. We were going through some of our past reports and our interaction with our members, and we pulled up one from a couple of years ago, and it was saying how excited we were that gold had breached I think it was $1,500, and how jubilant the sentiment was on that. And to see people catastrophizing now that it's dropped to $1,800 is kind of comical, in that if you were to skip 2 years from now, the idea of having $1,800 gold, mining investors would lose their fucking minds at that. And today it's like the worst thing that's ever happened. And this is just part of the natural ebbs and flows. And we are still in such a bullish environment. At $1,800 gold, the Barricks of the world, the Newmonts of the world are going to be printing money. And that money needs a new home, and it's going to trickle down throughout the sector. So, I'm very bullish. Of course, I'd rather it be $2,000 gold, but we're still in a really excellent environment right now, in my opinion.
And it's better that it moves ahead slowly towards its ultimate goal than it gets there quickly, because the faster a market moves and achieves new highs, the inevitability of it pulling back. But when you look at something like Bitcoin, all right, Bitcoin is trading now close to all-time highs. And then you look at gold, and there's supposedly the purpose is to fulfill the same function, store of value, insurance policy against government stupidity, which is definitely in overabundance these days. You kind of wonder, are we in the right sector or not?
That's a good question. That's a good question. And it is something I've thought about a lot, actually, because, I'll be honest, I don't actually have any Bitcoin exposure at this point. And it's been something I've been contemplating for the last year. Now, obviously, I wish I'd bought it a year ago at this point. But what I do like about mining and gold in particular, that I don't see to the same degree in Bitcoin, is the ability to achieve leverage in this sector. So unlike Bitcoin, where it really just makes the most sense to own the underlying asset, the actual coin, mining's a little bit different. Of course, you can own gold, and everyone should own some gold, but you can also own gold miners. You can also own gold explorers. And, these are the areas, if done correctly, if done carefully, where you can get, 10 times, 100 times returns in a good gold market. And whilst Bitcoin has had a phenomenal run over the last year, it hasn't gone up 100 times, but we are going to be seeing that in mining. So there are very, very few investment opportunities in the world that give you the sort of leverage and the sort of return potential of being invested in a mining or exploration company in a gold bull market.
And I think that is a really great point you're making there, Jamie, is that the opportunities there, the leverage, hey, maybe when you own Bitcoin at $7 per Bitcoin or 10, then you had those opportunities. But now it's gone up basically from 5,000, it's quadrupled. And and the fact is, like you say, unless you're playing Bitcoin futures or Bitcoin options, which I don't know how you go to sleep at night if you're holding an open position, pretty much the opportunity for growth isn't there. And gold been around 5,000 years. Bitcoin's been around for over 10 now. And we don't know how governments are really going to react to cryptos.
Well,
I think,
exactly. And then you have the Raoul Pauls of Real Vision, for example, who have been saying that Bitcoin has the potential to go to $100,000 or $1 million. And you know what? I won't pretend to know that one way or the other. He could be right. He could be wrong. I'd say what we do know is that we don't know what will happen with Bitcoin because we do not have the historical examples there to base that on. So that it is really speculation because it's totally new asset class in a lot of ways. So we're not really sure what's going to happen. What we do know is what happens in the gold market. Gold has been owned and traded for thousands upon thousands of years, and we know what happens when sentiment turns towards precious metals and capital flows into this space. And we know beyond a doubt that there are the opportunities to make tens, hundreds of times your money. However, and I will stipulate this, the nice thing with Bitcoin is you just buy Bitcoin. You can't really get that wrong. It's either right or wrong. There's no decision making. It's
binary.
Mining is a very different thing. There are lots of opportunities to make 10 times your money, and there are way more opportunities to fuck it up entirely and lose all of your money. So it's an area that requires a lot more discretion and good decision making.
And I've personally been on both ends of that scale, Jamie. I have no regrets. I've definitely come out ahead. But like you said, Bitcoin binary decision. Buy Bitcoin, don't buy it. Sell it if you own it. Don't sell it. With mining stocks, it's a little bit more complicated, and you've really you got to do some work. Even if you're going to follow people like you, like Resource Insider, you still got to do some work. And that's what makes it more challenging. But like you said, 100-fold profit. Well, if every junior miner out there was going to go up 100-fold, the decision would be really easy. But we know that some are just going to fade into the woodwork, and there are going to be 5-10% stellar performers. And then the question is, how do you identify them? And that's where you come
that's
in.
a very graceful way to put it, Kerry. Fade into the woodwork. I actually prefer to use the term crash and burn in a fiery wreck, which I think we're going to see a lot of those companies that are flying high right now do over the course of time. We actually get a lot of emails about this. So Resource Insider, it's a service for accredited investors. I don't make the rules. That's the rules government makes. We do private placement and investments. You must be accredited, which typically means in most jurisdictions across North America, you make over $200,000 a year, or you have $1 million in assets excluding your primary residence. So not many people fall into that category. So we get a lot of emails being, Jamie, how do I play this market? What should we do? How can I do deals like yours, et cetera, et cetera. And the reality is deals like ours are not the right choice for most people. As you very well noted, it is work. You've got to read the research. You've got to transfer money. You got to fill out paperwork. But what we are is really the sharp end of the stick. We are looking for those 10x returns plus, and we are helping people who are in a financial position to do it to allocate a certain percentage of their risk capital to these super high potential returns. What most people should do, and how I answer this question, is you want to do this. You want to own a good royalty company, a good major, and a good developer or mid-tier. If you own those three things in the precious metal space, this is going to give you, call it 75% of the upside that we'll see across the sector. For example, I own Sandstorm Gold as a royalty company. I own Equinox Gold as a developer / mid-tier growing company. And then there's always the Barricks or the Newmonts, which will kind of give you a more general exposure to the space. If you kind of own those three things, for most people, that's enough. Now, if you want to spend several hours a week reading through information, filling out paperwork, and you really like investing and you really want to focus and get the maximal returns out of this market, then someone like me, or you work with a very qualified broker or any number of advisors that is an expert in this space and can help find those 10 times returns. And something to note, Kerry, is what we really focus on with our membership base is positioning size. We had some very, very good returns this year, multi-X returns. Members were very happy. And the problem with that is that people assume past behavior will almost certainly be guaranteed in future behavior.
You mean it doesn't?
As you know, that's not how it works.
It doesn't? Really? Are you sure?
But we're very focused on helping people develop a portfolio that will go up by multiple times. But to know that every individual company will not do that. And there are going to be losers there. There are going to be winners. And it's about building that really strong portfolio that gives you maximal leverage to this sector. And that's what we try to do at Resource Insider. We're not betting the farm on one hot stock tip, that's for sure.
And in the interest of full disclosure, we've invested in a number of private placements in Canada, US, and have done quite well on most, if not all of them. But the thing about buying a private placement, even if the company is publicly traded already, it's not like you just push a button on your computer and the trade is executed. Like you said, there's paperwork to fill out, and it's not that easy to get rid of them either, because there's invariably a holding period involved, a lockup period, if you will. So, it's a different mindset. to invest here, because they're not really, they are kind of like a hybrid. They're in between publicly traded and privately traded. Some of them, in fact, haven't even gone public yet, and they're issuing shares in a private entity. And, those always give me pause for thought, because there you have no exit strategy if the company fails to actually pull off the public listing of their securities.
FSN Radio. It's all about what's next.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has a tight share structure, and with its current treasury, it can self-fund the advancement of its gold discovery into at least 2022. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
The Financial Survival Network. It's all about what's next.
Yeah. So I would say you should never, ever, 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 ever invest in a private company in the mining sector if you are not extremely familiar with that management team and what they are doing and who they are working with and their track record and their ability to take a company public, et cetera, et cetera. We do a lot of investments in private companies at Resource Insider. Every single deal we've ever done a private company in, I have a personal relationship with that management team. Most of the time I have known them for years. If I don't, I know someone that I trust very well who has known them for years. They have a track record of taking companies public. The beauty of public companies is if you can find those good deals and you can wait it out, then they often will go public at 2, 3, 4 times what you came in at. However, if they do not go public, you're pretty much screwed. That money's gone forever. Goes to, it's
dead
off.
money. Dead money.
And you got to be patient. We waited for one deal. It's public now, and it's public. It came public at, I want to say it was almost 3 times, just under 3 times what we invested in. But we waited the better part of 2 years for that to happen. Now, that's not going to be the right investment strategy for everyone. However, again, it comes down to positioning. I position money into these deals that I can afford to wait on, that I can afford to lose. But if it comes public in a year from now or 2 years from now, getting a 3x return, that's meaningful. That's something I'm very happy to be patient to achieve.
Yeah. So you really need to do a very thorough self-assessment of you, of your temperament, of your time frame, of your degree of risk tolerance. A lot of things go into it. But if you hit the right ones here, they just become these money machines. They're just like total cash cows, and they can take care of you for life. I knew somebody, now this wasn't a mining sector related thing, but he got into a stock called MV, was mortgage insurance. I can't remember the exact ticker on it, but it was in the infancy of mortgage insurance, where you buy a house for less than 20% down, the bank requires you to buy mortgage insurance. And he maybe had like a $50,000 investment, and that thing went up by, 50, 100 times. And he became very wealthy, literally within an 18-month period of time. And I'm not saying that that's going to happen to you in mining stocks necessarily, but as opposed to many sectors of the market, the opportunity does exist. If you got involved in Tesla in the early stages and you had the guts not to sell, hey, you could become wealthy in that stock. But I don't know of any other sector that has the number of opportunities as well as the number of losers that our industry has here, Jamie.
Well, I think that's an important differentiation insofar that in the mining industry, that can happen for you. It doesn't mean it will happen for you, and it probably won't happen for you, but it will happen to some people. And if you're smart, if you're careful, if you're choosing the right stocks, you can make a lot of money. And you should make a lot of money, especially right now. It might not be 100 times your money, but there's no reason you couldn't and shouldn't be making 2, 3, 4 times on a semi-regular basis.
Yeah. Hey, well, I look at it this way. Mining stocks, precious metal sector, it's a lot like religion. All right. When times are good, people are still buying gold. There's still interest. When times are good, there's still devout followers in religion. But when everything goes to hell, religion takes off. It never does so well. And it's the same thing with the precious metal sector. Yes. It's going to take off, and things are going to hell in a handbasket, maybe slowly, maybe elusively, but things are not getting better. The debt keeps going up. The macro case for precious metals never been better. But again, like you holding that stock that became a triple, 300% return, 200% return, it took a little bit of patience.
It did take a lot of patience. And, I think you surmised that very well, that you need to decide what type of investor you are before you do these sort of things. I'm not a trader personally. I come from a corporate development background within actual mining companies. So how I look at investment is I look at the actual asset that as an acquisition opportunity, whether I would want to buy it and own it in my company and see it developed and come through to its full potential. Now, so I'm looking at that. I'm looking at things that we're probably going to hold on a 12 to 24 month time frame, I would say, is the average. It's not always the case. We've been in and out of things in 4 to 6 months before, but realistically, I'm a long-term investor. Different people are going to have different strategies. And I think investors at home, need to be honest with themselves, if that's and choose the strategy that's right for their mentality. Right now we're going through a lot of volatility in gold. Do I like it? Of course not. But I also know that it's a necessary part of getting those high returns, those big runs up. You need to be able to stomach the downside of that too. And I'm okay to sit and wait through that. I can see a lot of red on my screen and think, well, shit, but it doesn't really ruin my whole week. On the other hand, I work with and I am familiar with many investors who just cannot possibly sit through this, and they'll sell off everything now and then they'll buy back later, or they won't enter the gold space at all. So, you just got to be honest with your own mentality. And for me, I'm a patient person and I'm happy to wait, but it's going to be different for different people, for sure.
Right. If you don't have a strong will and a strong tolerance, and you can't stand looking at the screen and seeing everything red, probably not the right place for you. And there's other places to put your money. But if you've got the tolerance for risk, then this could well be the place to be. My own personal opinion, what's coming down the pike, geopolitically and economically, every country running up mountains of debt, we really don't have much choice here. Well, we'll leave it at that, but just go over, take a look at Jamie's site, resource-insider.com. Take a look at Jamie's work. Great place to find opportunities that you're just not going to find anywhere else. And if you're an accredited investor, it could very well give you some opportunities to really kind of get ahead of the market here, especially since it's taking a pause. This could be a great entry point for you. And if you got any questions for Jamie or myself, send me an email, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page, Financial Survival Network, and of course our main website, financialsurvivalnetwork.com, where you can get a free weekly newsletter. And Jamie, we will talk to you again real soon. Really appreciate you coming on.
Thanks for having me, Kerry.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.